The numbers are out now, and we're seeing quite a big tick up in jobless claims. 385,000 claims for the week ending March 30th compared to economists' expectations of claims at 353,000. So we're kind of going backwards here in terms of the trend that we've seen with claims coming down and down. In fact, they seem to be now coming up a little bit. Dom, what kind of reaction are you seeing in the equity futures?
Betty, immediate market reaction to the downside, as you might expect here. We are well off session highs right now. We were up about 65, 70, 75 Dow points earlier this morning, down only or up only about 29 points now. The S&P futures up 3 points. And as you can see here, we have seen a slight move lower off those session highs. What we're seeing, the real reaction right now is Treasuries, 1.78% the last trade for 10-year U.S. government notes in terms of yield. But check out the action here. Yields have been plunging in the just about 10-15 minutes leading up to this particular number, starting right around the 8 o'clock hour. So again, people buying up Treasuries, forcing those yields down about 1.78% right now. Currency side, euros $1.2822 the last trade there. So relative weakness for the euro versus the U.S. dollar. On the commodity side, New York crude $94.17 now, and Betty, gold continuing that slide, now well below $1,600, $15.48 the last trade there for gold futures, Betty. So again, we're seeing quite a bit of action here, and of course all in front of that important jobs number tomorrow.
We are. All right. Thank you, Dom. Dominic Chu at the touchscreen. Mike, give me your take on what's going on here with jobless claims.
Easter. That's what went on. You can't seasonally adjust for Easter. It moves around every year. The week that Easter comes, it was very early this year. Don't look at this number. A couple weeks from now, if you traded on this, hope you got in and out quickly because you'll probably regret it. We will probably see a big change in the coming weeks as there's some give back on this. 2 states, the Labor Department says, had to estimate their claims because the work week wasn't long enough for them to get their actual paperwork in. So a lot of problems with this number, something you can throw out. And also, it does not correlate at all to the March payrolls report. That was the week of the 12th. Payrolls report did come down a little bit. The latest expectations are for 195,000 total jobs. Interesting, that number fell after ADP yesterday, but the number of private sector jobs, which is what ADP measures, did not. We're still expecting 200,000 there and a 7.7% unemployment rate. But a lot of wild cards going into tomorrow's number. Today's jobless claims aren't one of them, however, Betty.